All right, we've found ourselves in a Bitcoin bear market. It's confirmed, but don't worry, we've got plans. A general update for the 5th of Feb. Look, bearish case is certainly on, and I've grayed out the bullish case because it just doesn't have a case for a bullish move in Bitcoin right now. We are clearly in a bear market. The 4-year cycle is not broken. We were in a delayed bear move and will break below the 100-week moving average, which we have happened. The business cycle is not coming, and I'm going to talk about that a little bit in more detail. And we did, in fact, experience a bull trap very briefly, and the Mangosteen indicator detected that and reversed course at the perfect time for us to go short. I'm out of the market right now, but I should be short, but unfortunately I just didn't execute in time, and so I'm waiting for the next opportunity. Right, so here is the Bitcoin chart with the Mangosteen indicator on it. We've been bearish since 108K. We briefly went up and were long for this bull trap. I warned people that I thought this was highly likely to be a bull trap, and we then went bearish just as we broke below the 100-week moving average and have ridden that down to 71K that we are currently trading at. And I suspect that we've got more pain to come, and I'm going to show you why, and we're going to put an estimate as to where we think the market could bottom. And sentiment is not showing that we have fully capitulated yet. So we can see that sentiment is here at 12. Now, prior to a capitulation, we're at 12 to 14, which is exactly where we're at. And then we have a big drop, and we find ourselves at around a score of 6 or 7, which is when we have truly broken sentiment. Right now, there's a lot of pain and everyone's very sad, but we really need to lose hope, which we haven't done quite yet. So this suggests to me that a capitulation is coming and there is more pain to come. What we can see is the halvening. Now, when looking at the halvening from the halvening point, we can see that this bull market was very, very bland in relation to previous bull markets, which gives us room to suggest that maybe we're not going to pull back and be as strong as the previous one because there wasn't as much leverage built into the system. We didn't have retail come out and lose their shit. But when looking at it from a bottom perspective, we can see that it broadly aligns with the other cycles, given how far things bottomed last time with the aggressive QT and interest rate hikes that we had during 2022. Now, we have this, and we also have bands. So SMAX bands here. Now, typically, a really clear bull market would peak in the red bands traditionally. Traditionally, we'd be up in the red bands, we'd probably peak just outside of the red bands, which would place us at around that 200K zone, which is what everyone was expecting. But we only ever got to 126K, which was a real shame. And then we had sentiment break. Now, the last time we were at the pink bands, or the red bands, was in December 2024, where we rose up there briefly, we came and relaxed, and we went for that second run, which we all thought was going to be the big one. Now, we haven't peaked in the red bands, and we are already down into halfway into the green bands, which gives us some room to say that maybe we're not going to get a whole lot lower. But any traditional capitulation would find ourselves breaking below the green bands, which would find ourselves at the 60, 58K, 60 zone. So that could be highly likely. We also have the power law curve, which has a bottoming around 57, 58K at around this point now. So that could also point to a 58K bottom, while we also have the 200-week moving average, a traditional support for the bottom of the market here, converging on the 58K zone. And so there's a lot of confluence in the market around the 58K area. So I'll be looking for things to bounce off that 50K, $59,000 price point over the next 3 to 4 months. We'll see how that goes. Of course, the good thing is that we have the Mangosteen framework to take us down there and to bring us back up profitably, which is great. Finally, we are going to revisit the Bitcoin PMI very briefly. So everyone is now familiar with this chart. The PMI aligns with the peaks of the previous Bitcoin markets, and we have just had a solid print back into the expansionary zone as we have gone above 50 on the PMI, indicating expansionary economic activity. But let's break that down. I don't want to get people too excited. So that PMI figure is measured by 5 ISM core components: new orders, production, supply, deliveries, inventory, employment, and then they have contextual ISM indicators that help and understand and explain what's going on in the ISM. And I've broken this down into a slide for you now. Now, what we can see is that new orders, production, and supplier deliveries have gone expansionary, while inventories and employment remain contractionary, and that is the same for customer inventories as well, while everything on the demand side looks positive. So what we have is a demand surge for manufacturing, but firms staying conservative and relying on inventories, drawing down on their inventories strongly and not expanding employment just yet. They're keeping their options open, but remains a strong setup for activity if demand momentum holds, right? So if the demand holds, they're going to want to build inventories, and in order to do that, they're going to have to hire. So that's where the PMI could find itself going expansionary, but it will delay Bitcoin's moves probably for a couple months. And so this is where I still think we sit clearly in the bear market for the next 1 or 2 months at least. I do want to finish off with this final point. Bitcoin's correlation with the ISM PMI, or Purchasing Managers Index, is really a concern to me. It represents Bitcoin as exposed to the fortunes of the business cycle and consumers. It's still aligned with Main Street. It needs to be aligned with Wall Street. So to be a true monetary asset, Bitcoin must ignore this and correlate with money supply, geopolitics, and what central banks are up to, which obviously, because we don't have any central bank adoption at the moment, means Bitcoin's unable to do that. But what we want to see is more nation state and central bank adoption, which we haven't quite seen just yet. Quick update on the MicroStrategy MSTY winter rebalancing tool. So we can see that we went short into winter, and like short MicroStrategy or rebalancing into winter, just at the right time. MSTY has had a bit of a tumble, and in response to that, the inverse winter has done really well, and we've sat in that quite nicely. So this tool continues to smash it, continues to provide people with constant all-weather high-yield income, no matter what the market conditions are doing. And obviously, you can also use this as price risk management for your MicroStrategy position. So things are going well. So if you found this interesting and you're interested in the Mangosteen indicators, they can be accessed through Mangosteen Private. Currently a 2-year license available on mangosteen.global, which is my website. I have a 14-day no questions asked refund policy, so there is no risk. If you decide that it's not for you after exploring the tools, then just flick me an email and I'll refund you, no questions asked. I hope you found this episode enlightening, guys. I hope you've seen that I'm telling things exactly from the book from Yieldmax themselves, and you know, they've represented their product fairly. It's just that it's quite a complex product that you need to understand in detail before you can jump into it. And that comes back to my idea of, you know, actively managing your MSTY winter balance so that you can generate all-weather income. Now, of course, this channel does not provide financial advice or any advice of any kind. Everything here is general information only and for entertainment purposes only. It does not consider your personal objectives, financial situations, or needs. Reference to any financial products are factual only, and you do not constitute recommendations. You must do your own research. Any investment or trading decision you make, you're entirely your own. This is entertainment only. You are listening to a random Mangosteen on the internet.